Righto, money miners. What do we got today, boys? We've got a BHP fat finger, or not a BHP person, but related to the BHP stock.
Oh, it's a nasty one.
Yeah, not as nasty as the City one, which was nearly 81 trillion. That didn't get through
Is that
the other day.
Some of money can't exist, right?
The entire financial system has been wiped out with it.
Yeah, apparently that one was, I read it, the field that come up in this unused screen had, like, they typed it in, but they forgot to delete the 15 zeros that automatically come up in the field.
Wow.
Yes. So obviously 15 zeros equals a trillion.
Somebody should do that with the money in mine bank account.
Oh, shit, yeah. You won't be getting it back either. JD, you're digging into SQM, eh?
SQM, leading into a sort of broader lithium chat. That's the sort of crux of it. I think SQM's not the most familiar name to a lot of us, but lithium is here in WA, and I think there'll be people sort of curious to learn a bit about what a big miner, what the big beast in that industry is thinking.
Mate, can you imagine if lithium rebounds? Because we've got another lithium IPO converting into gold today. So if you've got gold and lithium at highs, they're going to be the best companies ever. And look, I just check this out right here. This is just a snippet of what's going on. I'm looking at this. I'm looking at gold, and I'm looking at a freaking huge cutback needed. That has got MMS's name all over it. Get them down to Forestania. They are the team to start getting into that little honeypot down there. They will. We've seen what they've done at Myrie. Ahead of schedule. I want to see them, why wouldn't you pick them? They are, speaking of the tethered goat, MMS are the goat of open pit mining contracting. Greatest of all time.
They'll be there before you can believe it.
Oh, I know. Give them a bloody bell.
Where there's lithium, where there's gold, if you've got to get it out of the ground, mate, I know who I'm calling.
Well, don't get used to looking at it, because it'll be gone before you know it by the time they start mining it. So let's get into a lot of money that was gone before they knew it, or I assume it's come back. Or has it for BHP stock? Has it come back? Has it been refund? Is there a refund policy on this?
They tried. There's no refunds, mate. I'll get to that. But this is crazy shit.
What's bloody happened?
This is we've all made mistakes working in finance. Some mistakes have worse consequences than others, and when there's a potential of a big consequence, hopefully you've got protocols in place to mitigate it. But from time to time, we see this phenomenon of the fat finger still pop up in financial markets, and it's just a funny occurrence when it happens. You feel for whoever's behind it, but you in the moment of milliseconds, millions of dollars is lost in these things. In this instance, this is the BHP share price that it's happened to. A multi-hundred billion-dollar market cap can be affected by an order of BHP shares that was the wrong quantity.
Yeah, right.
So today is a funny day about BHP in the sense that it's actually its ex-dividend date, and if you purchase a stock on its ex-dividend date or after, you will not receive the announced dividend payment. And if you were paying close attention to BHP, they announced this fully franked dividend in its half-year results of 50 cents per share in US dollar cents.
So yesterday was the record date. Today's the ex-dividend date, which means you had to hold them yesterday.
The record date is usually a day after ex-divvy date.
Oh, because it's T+2.
Yeah, but this is ex-dividend date is when you trade X without the dividend. Yep. Yeah, so if you kind of assume perfect markets in a world where BHP last closed on the ASX, and then you go ex-dividend, in a perfect world, it's 50 cents less. But the world moves in between your stock opening and closing and those sorts of things. But in this instance, you didn't get BHP opening, 50 cents lower than it closed yesterday. Look at this. This chart is crazy. You're effectively just seeing the stock open at $42, and in the space of a very short period of time, it's trending all the way back down south of $40 and south of $39.50 as well. To get it really
5%, over 5%.
It was a 6% move in a company with a market cap of BHP's. This is like as liquid as stock as it gets on ASX trading terms. And it's a fat finger. What's happened is an order of 750,000 shares of BHP has been input at $42. That's in Aussie dollar terms, $31.5 million. $42 is much higher than where BHP should have effectively opened. And you can see that this order is put in just moments before the auction finishes and the order, like the open actually begins. We'll play it on the spark chart that Adam's given to us because the replay is just fascinating here. And Jada, you might have some comments of what we're actually looking at. But you have this like auction process right before open, and this 750,000 share BHP order pops in just moments before open, but during the auction. And what's it doing?
Yeah, so people will know that punt on the markets pretty regularly. You get the staggered open on the ASX roughly over a 10-minute period. It's in alphabetical order, so you sort of A, B, C will go first, and then roughly a couple minutes later you get the next slot. That's kind of how it works. And what you're sort of saying is that auction process is just a matching up of a sum of demand and supply that finds an equilibrium point and normally matches. But when you come in on either side with way more than the other side's got, it obviously forces up or down that price depending on how much you got.
It takes that whole side.
Yeah, and it's a funny one because when you think of like a fat finger, you think of like often like an extra zero, or maybe on the quantity side, maybe on the price side. But what we're kind of implying, and maybe in time we'll find out a bit more information, is like you would have wanted to put the price in whatever, like $39.30, but it's actually come in, I take it, up to a limit which is far in excess of what the market price
those
is.
are my two like lines of inquiry, and I'm not as like familiar with trade execution stuff, but I was like, why would, like, even if it is a fat finger, why'd you put it in at $42? So apparently, like, you just chuck it in there because your volume's only supposed to be 750 shares, but it'll get done at the open price of, call it, $39.50, even though it's the fact that this was 1,000 times more shares has completely changed.
But do you think it's a fat finger on the number of shares, not the price?
That's the other line of inquiry is how did you fat finger 3 zeros? That makes no sense. Well, when you're putting in these orders into Iris, you put a T to mark an extra 1,000. Oh, yeah. So you're at 750 T. And if you're used to inputting your number of share units in thousands, someone might have accidentally typed a T after 750 submit.
Yeah, you go from doing a lot of execution on small caps, and then all of a sudden somebody gives you an order on BHP, and by default you hit T.
That'd make more sense.
You'd know. I mean, there's no way you'd put a market order, order of that quantum just in the market. If you're sort of the one in charge of executing it, you'd break it up into bits and pieces over the day. Like, you're not going to put that much in, because even despite BHP's liquidity, that much money isn't swapping hands in the open generally. Not that I've looked closely.
$31 million order here moved BHP 6% and gave it all away in a couple of minutes. But that's kind of what can happen when you market buy on open to a stock as big as BHP.
That's why you need a lot of checks and balances when you do these things.
So that's the other point to what you said, Matty. Could they reverse it? And amazingly, you can actually see in this screenshot I'm going to show here, the brokers realised their fuck up and they've submitted this cancellation request. And you can see they've submitted that cancellation request, and then 2 minutes later, the trade that says trades in BHP at $42, and it stands. There's this acronym NCR, and an NCR stands for no cancellation range. So to cancel a trade effectively, there's a very specified range where you can actually do that. We'll put up a screenshot of what the range is. And look, thanks to illiquidity provider on Twitter, there's another acronym for NCR too. It's known as no crying at the casino. So you can't, no takebacks. You fucked up. If and someone's been the beneficiary of this optimistically. They've realised someone's stuffed up, and then they've
sold them all at 42, bought them back at 39.
Exactly.
Within a minute. An
enormously costly mistake for some broker out there, which you don't actually find out the identity until 3 days later. It's like T+3 on the broker level data. But yeah, speaking with some traders, they reckon filters should have caught this. You should have some checks and balances that would pop up on this. So either the broker actually has no filters in place, or they push through a soft filter. So if it's supposed to be if it's a $30 million order, you should have some prompt that pops up, for example, as a filter which says, "Are you sure?" And maybe they've like just instinctually pushed through that prompt because they're used to doing it sometimes. But either way, it's some filters have broken down in the process is the most likely thing.
Could have been a big night at the Paragon in Sydney. Oh,
Jeez.
coming a bit dusty on the open. Oh, it's bloody Sydney. It's 10 o'clock. Should be half sober by then.
Mate, speaking of the casino, someone might be going to the casino to try and win back their losses.
That is shocking. That is so awful.
Yeah.
For the person on the wrong side of that one.
Oh, yeah, feel for him.
God.
Yeah, who knows?
What's the biggest number fuck up in finance you've ever made, JD? What were the consequences?
Definitely made a few. Oh, the quantum would have been a few $1,000.
Yeah.
Bloody, trust me, I don't want a fat finger on the child support payment because I won't be getting that back. No refund policy there.
Alrighty, should we chat about lithium?
Take it away, JD. SQM, annual and Q4 results.
Yeah, they came out with their results yesterday, and then overnight Aussie time they had their call. So I thought for a couple of reasons it'd be interesting to kind of check in on them and see what's going on. For the reasons that came to mind is obviously the state of the lithium market. It is completely wrecked, kind of needless to say. The commodity price itself is probably a bit up on what it was 6 months ago or so. 2024 was obviously a pretty treacherous year, but plenty of the stocks are breaking lower and lower. You know, Pilbara below $2, I think in the 180 range, IGO in the high threes. Yeah, so they continue to trail off as the rut kind of continues. And of course, this leads to opportunities, which gets us pumped. The second point why I thought it was interesting is just to tap into the state of SQM's assets. Because of course, if you start looking at lithium, you obviously want to get a feel for where those low-cost producers are, where those assets that sit at the bottom of the cost curve are, and what those companies are kind of trading at. And everyone kind of knows that SQM has some quality projects. So I thought it'd be worth just seeing what the operations have been like, whether they've been sort of managing costs and those sorts of things.
Right, so how do they look, JD?
Try break it into two parts, Matty. So obviously you've got what's in their control and what's out of their control. Needless to say, if you're looking at like a revenue number for 2024, it's going to be pretty gruesome when you compare it to the year prior. But they've been under a massive sort of CapEx program. Obviously they've bought Azure through 2024. They've invested a lot of cash into Mount Holland, both at the mine and at the refinery. So a lot of money going out the door on that front. Needless to say, free cash is going to be pretty weak. No surprises on that front. But you want to just check in that they're managing things on the cost front. So at the top line, if you're looking at 2024 revenue, that number fell by $3 billion to $4.5 billion. And everything I'm going to quote here is in US dollars. Now that if you zoom in specifically on the lithium part, it's actually a bit more grim because lithium revenues fell nearly 60% to $2.2 billion. So in this market across their portfolio of assets, lithium makes up about half their revenues. You've got what they call specialty plant nutrition, which is fertilizers. Yeah. That makes up around about $1 billion. So call it in this market 25% of their revenues. And then iodine, which is a funky business we're going to chat a bit more about in a second, also contributes roughly 25% of their top line. They've got a few other sort of commodities that I won't get too much into.
And don't forget what they coughed up for Azure for handover.
Yeah, so
in the lead up.
So $350 million went out of their pocket over 2024 to wrap that one up.
Yeah.
On the accounting side, they marked about a $400 million loss. There was a chunky one-off, kind of in quotation marks, tax bill that totaled $1.1 billion. That was settled in, I want to say, May of last year. That was on the back of a pretty long-running dispute that they'd had in country in Chile, and $1.6 billion went into the ground. So a lot of growth being chased up, and the rewards of that are, lithium production hitting a record. So 58,000 LCE was a record for the company, the most lithium they've ever produced in a quarter. So things are looking fairly good on that front. No cash flow statement yet, which I'll sort of look out for when it comes, but you can dig through the various numbers they do provide and get the sense that free cash flow came in at about negative $500 million following all that investment that I just sort of mentioned. On the operations, I'll sort of go through it quickly by each one. You've got lithium volumes up 21%. No sort of surprises with things in Chile sort of ramping up. And then, of course, Mount Holland coming online and finally starting to add tons at the back end of the year. And then you've got, on the other two businesses, between 10 and 20% increase in volumes. and that kind of balanced changes in prices that they saw. They don't break out the operating costs per asset, which is kind of frustrating again, but you can work through it and get to the point that margins were a bit weaker than what consensus had predicted, but there's still an improvement on the previous quarter, which is always kind of good to see. And in the lithium part of the business specifically, there was a jump up.
All right. So, what's the pot? Like, how'd the potash get in? Well, is it any relation?
Brine salts as well. Yeah.
Is that okay?
So same assets. Yeah, like you've got just tremendous evaporation conditions, and sulfate of potash is
that makes sense.
Produced through the evaporation process.
There you go.
Yeah, the Caliche deposits that they have, all in the same area. These are all in northern Chile. They produce the iodine. That's hard rock mining from surface. That's not sort of pond type extraction, but the things are kind of similar there. And the way the assets came into the portfolio, sort of similar when the company was privatized back in the I want to say in the 80s. So there's a very interesting and kind of controversial story there.
I think potash was a much bigger business for SQM for a long period of time than lithium was.
Yeah.
Yeah. Right.
Yeah. Interesting. Absolutely. On the Aussie side of things, so they mentioned that Mount Holland is tracking pretty well, steadily ramping up, and they want to hit nameplate capacity by the end of this year. Concentrator running at 80% of capacity now, and you're going to see Mount Holland start to add pretty sort of decent tons. They're targeting like 10,000 tons of lithium carbonate equivalent for this year, with the refinery being 95% constructed, 2/3 commissioned, first hydroxide to come out mid this year. So obviously everyone is very keen to see how that progresses, and you'll get a bit more info out of SQM than you kind of will out of Wesfarmers. They've kept that pretty under wraps given the larger nature of their business.
I should bloody drive past that because it's just you never hear anything about that construction at all. But it's obviously been happening. It's right next door to TLEA, isn't it?
Yeah, and I mean it should mostly be done. So they sort of earmarked a bit under $100 million to go towards capex on the Kwinana side of things. So that kind of tells you that most of the investment is done. If you think about Mount Holland and the Kwinana in one big lump together, most of the money has gone out the door, and they want to start seeing a return on that. Not sure they will this year, but we'll see in time.
I've tried asking around about that, but yeah, every indication I've got is that the likely thinking in Wesfarmers is still pretty optimistic about it. So, I mean, that'll be a remarkable outcome if it comes to fruition, but they'll be defying the odds of seen so far.
Well, you just got to put your head over the fence and say, "Oi, how do you do this bit?" And because IGO and Tianchi have obviously been through the process first, and so
they'll say, "Don't do this."
They'll stitch each other up. No, press this button, mate. What about Andover, Azure?
Yeah, not too much commentary on it. Also, sort of roughly 100 odd, a bit under $100 million will go towards it. What they did say is that feasibility should be done, and they want to make final investment decision by the end of next year. So a bit on the back burner.
100 million just from SQM.
Yes.
Yeah. So that'd be what 200 total with Gina.
Yeah.
Bloody a lot of money still going towards it. If approaching FID, they must be doing some sort of pre-production activities. If 200 million's going to it, unless they're more drilling or I don't know.
I'd say sort of all fronts, more drilling and just feasibility. And maybe that's a check that's going to be spread over a little bit of time.
Yeah.
Who knows? Maybe there's a few other bits and pieces, early works, like you kind of say, that they want to work on.
Must be early works of some sort.
Yeah. Just on the iodine business, this one's a bit of a gem. It's really interesting. So as a proportion of SQM, it made up about 20% of their revenue over 2024, but about 40% of their gross profit. So it's punching a bit above its weight given the weaker state of the other business units. The business itself runs at like a 50% gross margin, which is kind of cool. Obviously, CapEx not included in that. And they were actually sort of posed the question, would you consider spinning that business out on its own? Like it's, in terms of revenue, doing $1 billion, like I mentioned before. So 50% gross margin, it's netting a few $100 million in profit each year. It's quite decent. It makes up 35% market share in its own business, and the Caliche deposits are the only source in the world of this natural iodine. You know, Japan makes up kind of 30% of the market as well, and they do recycling and other bits and pieces. But yeah, it's one I'm kind of keen to learn more about. It's a solid little business, but they batted that one back pretty safely and said we'll keep it as part of the unit. No need to spin that out.
Other than people trying to, stay safe in a nuclear war, what's iodine used for?
Like medical, wouldn't it? Like
you have it injected normally when you get an X-ray, and it helps things show up better. That's 60% of the market. There's a few other pharmaceutical type things that it's used
PET
in.
scans and that, isn't it?
Yeah. So interest, not something I knew. I had to do a bit of digging on that as well, but it's a
good for
interesting
cuts
market.
and stuff. Oh, and betadine gargle.
Yep.
The sore throat gargle.
Love to know what percentage of the market that is. But
iodine, big in demand.
Yeah, so
right. So I'll let you do the balance sheet, JD. Like I could if I wanted to, but I'll let you do it.
The reason I thought it'd be kind of interesting to comment on it is really thinking about Albemarle, the other big player, and how much strife they are in, given the state of their balance sheet. So SQM are still going to be spending a fair bit of capex over 2025, $1.1 billion. That's still going pretty hard at it in my eyes. And they've got some debt, but they've got debt that, the likes of MinRes would kill for. They've got a substantial amount of bonds, sort of in smaller quantum. They sort of range from $400 to $750 million. But they've got some pretty awesome terms on a lot of them. A few of them are 2050 due, 2051 due, paying 4%. They're pretty awesome. And then there's others sort of coming up for expiry in 2029 and 2033. So mostly it's friendlier. On the short-term side, you've got about $1.1 billion due this year. And if you think about that in conjunction with the capex that they want to spend, there is potential that they face a bit of pressure on that side, and they need to sort of start thinking about other sources of funding. They did raise capital back in 2021, but you could have wrapped a much easier sort of growth story around the company back in 2021 when things were going gangbusters, but they're still paying a regular dividend. They can pull that back. You've got the deal with Codelco and the Chilean government as well. So I'd be inclined to think that you could get something friendly out of them too, and you can pursue a few other avenues before you actually have to raise equity. But it was another question that an analyst asked, would they consider raising equity over the next year just to cushion the balance sheet a little bit?
And they said?
They said no.
No.
They said we'd look at...
telling you.
Well, they said we'd look at the dividend and pulling that back first. We've got a few other sources. We can play with a few things and pull back on capex before we'd need to go too hard at raising equity and diluting.
They can refi the near-term maturities. Yeah.
Exactly, yeah. So there's more options on the table than jumping straight into a capital raise.
After doing a bit of a deep dive on them, mate, do you think, how do you think like SQM compare to, the other, like, the investment opportunities that are more familiar to us in the ASX market?
It's an interesting one. So you've got Atacama being the flagship asset, one of the best lithium operations in the world, but it's not without its kind of ownership complexities. So you guys might remember there was a lot of debate with the Chilean government last year. They came to an agreement kind of via Codelco that they would water down their ownership to 50% minus one share, with essentially the government having 50% plus one share from 2025 through to 2030. And then from 2030, the big debate prior to this was like, your permit's up then, what are you going to do? Are you going to have the asset just taken off you? Because Chile, very left-wing government came into power, and there was a lot of talk about nationalising everything. They are only going to have 15% ownership interest from 2030 to 2060.
Wow.
So that's, from going 100% 6 years later. There is a high quota. It's going to be running more tons through it. This is a massively long life project. We're talking about another 30 years. So you're getting 15% of a bigger pie, but that's still a big haircut. On the positive side, you've got at least a portion of it when there was a real risk that you were going to have it taken off you. But this is, of course, why Tianqi were super, super pissed off. And they said, hey, we're a massive shareholder. I think they own sort of 21, 22% of SQM. And they're like, how can you just make this agreement with the government and not even consult your shareholders, not even consult someone who owns 1/5 of your stock? So that's an ongoing debate, and it sort of led to a few question marks around the rule of law in Chile, kind of rightfully so. Like, people get these, Chinese companies get these accusations thrown at them all the time, but it happens in other parts of the world too, and understandably they're pretty pissed off. I'd be as well on that front, but you've got that security. So pros and cons. You've got access to a quality asset. You've also got a bit of complexity to it. If you're comparing it with the likes of a Pilbara and a Pilgangoora, with the iodine business, with the fertilizer business, it's nowhere near as sort of straightforward just to kind of compare them right. If you look at just numbers for 2025, I think you can sort of easily back out a number of, say, 1.5 billion, maybe a bit more in EBITDA this year, but it's an $11 billion company. Again, all US figures. So that's pretty steep. If you start thinking about a bit of a recovery, like the company is sort of talking to, they think lithium continues to be weak in 2025, but 26, we're going to see demand just continue to track up and supply will continue to track up, but not to the same quantum. And you see better pricing environment. Maybe you get to $2.5 billion in EBITDA. That looks a bit friendlier. That looks at kind of like a 4 or 5 times multiple. But yeah, I mean, you look across the spectrum, like Pilbara is in Aussie dollar terms like a $5.5 billion company and kind of breaks even at these prices. Like, say lithium prices kick up 50% and we get to 1,300, call it 1,300 SPOB SE6 pricing, maybe they're making sort of $600-800 million in Aussie cash flow. It kind of feels like to me that is already priced in, even at $1.80, $1.90. So, maybe you start seeing value if you go down the curve a bit more, maybe, but then you're getting that torque, you're playing with a bit more fire because who knows where things kind of settle out. You've got people like Cattle who are not completely incentivized to have lithium run hot. They're incentivized on the vertical integration of their business, and maybe a bit more supply is happy for them. You've got Goulamina, Monono potentially coming online. We spoke about Chinese operations in the middle of nowhere coming online. You've got more brine projects coming online. So, yeah, I mean, it's a market that's growing very quickly, but I saw this and I saw like Pilbara and I wasn't filled with confidence that at this point they're super cheap yet, but I'm sure there's people that have gone way deeper on the lithium space and they can get comfortable at these prices.
It's whenever the catalyst is that it's going to, I don't think lithium's going to be a moment catalyst. It's probably going to be a longer sort of turnaround.
Yeah.
Like I don't think there's a point where like there's just spod getting bored everywhere.
Yeah. But you need to kind of be patient as well, right? You need to think, hey, maybe it's coming in a year, maybe it's coming in a couple years. And you look at like IGO we mentioned the other day, they're now well below the price that they agreed the Greenbushes deal at. That's pretty interesting. I mean, it kind of speaks to their capital allocation since then, been less than stellar, but
yeah.
Well, like you think of when we first started talking about this downturn was what, start of last year, and like the street thoughts, I remember the consensus was this could be, 9 to 18 months of lull.
Yeah.
And we're at, 15 months.
Yeah.
Or a bit less at the moment. So like feels like it's gone on forever, but from what the initial thoughts were, it's sort of lining up that this is where we were going to be.
Yeah.
So
we should pose the question to a few more fundies in time, because I remember we had the chat with some on the show, some privately as well, and they're like saying things to the effect of, would love to buy some of these companies, say Pilbara, below $3, love to buy it below $2. You wonder if some of them are backing up the truck now. Maybe we'll find out in time.
Yeah, I still think we Aussies put these, maybe still slightly premium valuations on, especially like, our domestic assets relative to what their, earnings are. And we've got that, desire to do that. But if I were like a big, fund manager, and I'm looking to get some countercyclical lithium exposure now, I'd look to the likes of an SQM, because you've got the lowest cost kind of assets on the cost curve. You've got, a balance sheet that can withstand a harder market for longer, and they'll be like super beneficiaries of it when it turns. There might be some volatility in the meantime, but I'd be looking at SQM before I'd be looking at other ones where the earnings is a bit more cagey, and in some cases where the balance sheets are compromised. Yeah,
and you're probably right to do so. Like I mentioned, they might be looking expensive on this year's earnings, but if you're buying a project with many, many, many decades of life, and maybe next year 4 times, like think about a business that you could buy that has 30, 40, 50-year life, and you're buying it for 4 or 5 times earnings. That's not that bad at all. If you're patient, if you're long term, obviously there's a bit more work that needs to go into fleshing out those numbers. That is kind of as rough as it gets on back of the envelope type work, but that as a kind of a leg in to do a bit more work on it is not the most not the worst opportunity to look at, I think.
And I think, well, if you look at the two leaders in Australia listed, like IGO and Pilbara Minerals, they've probably got the best. They haven't got really any balance sheet stress at the moment. Like the debt's within the Winfield JV, but IGO don't have debt to my knowledge. Pilbara is obviously still reeking from the cash from back in the day. So yeah, they're definitely not a bad position for a turnaround.
Yeah. I think particularly on the Pilbara side of things, they've played a sort of fine balance and played it quite well on navigating that balance sheet, not going and buying something when it was way more expensive. They did that a bit later in the piece. So
and it was what to work out? It was a 5% dilution. What they paid for Latin.
5 or 8, something like that.
It was pretty. Yeah, it wasn't for what they ended up with. It wasn't that much.
Yeah, no, it wasn't cash out the accounts.
Shares. It's like it's for free.
That's it.
Good stuff. Good bloody rundown. Oh mate, they'll be bloody. The Bulls will fucking love that you're giving them the airtime, JD.
Bit of a monologue there, but. What about the IPO rebirth,
ever
mate?
Since that robot chat, mate. It's all about batteries. Mate, we're lithium IPO rebirth. Like that's the thing, you don't have to stick with lithium all the way. You can go do some other shit and wait for lithium to come back. I think it'll really need to come back to get a lot of the small lithium mania back going. I wouldn't be banking on that. But we're heading down to Forestania. A bit happening in the district. And look, when there's a bit happening anywhere, boys, it means EPC contracts for Quattro. If there's a bit happening, something needs to be built. No better person to build stuff than who designs the stuff.
What do they build, mate?
Mate, they've been known for underground design, engineer, construct, install for years. They've now transferred that to the surface for paste plants. They're going beyond that globally to build pretty much anything you want that has steel in it. They are absolute gurus.
Above ground, below ground, or build the plant that sends stuff underground again.
Oh, mate, exact, mate. They can install paste fill reticulation pipes longer than the Pacific Highway. Like they will just jam them bastards up forever.
Bloody impressive listening to their team,
mate. And talk about another goat of the EPC world. So
Go Quattro.
Speaking of goats, the old tethered goat. Oh, the best. What? Play TG6. Look, just change it to tethered goat. That's what it should be. It's what it should have always been, the tethered goat. So they've had a rip today, 38%. So they were one of I think they were a 2022 IPO when they got some lithium ground down at in the Forestania area. I think, yeah, Forestania. But they've actually acquired today an 80% interest in what's it called? Van Uden Gold Project. So, and pretty like $4 million total consideration. One mil's in shares, which is at a premium, $500,000 deferred. But they've ended up with 238,000 ounces. So for the 80 in a existing resource, all open pit stuff, but pretty much got it for $20, like for their 80%, got it for $20 an ounce, which is in this market for what gold's selling at, I think is pretty bloody got it for nothing. I think there's a bit more to it, but the 80% they've bought off this Montague private company, but the other 20% is held by Bartow Gold, which is the Marvel Lock area, which was part of the Minjar thing. So you had Minjar Gold, which is, you look at the websites are exactly the same, and it says Minjar Gold has Pajingo, Bartow Gold has Southern Cross, but it's all Minjar. So I know that it's operating. It's like an owner mining setup, but they did have contractors there. There was a bit of a dispute. The contractors left and yada, yada.
They tried to run a sale process on that for...
Yeah, it was 2021 or something, wasn't it?
Yeah, I reckon it extended for a couple of years, but the thing with sale processes of often Chinese-owned assets is unless there's an offer above book value, they don't sell.
No. Well, and you look where this is, like, I'll bring up the map. You can see, I would assume they're keeping the Bartow Minjar have kept the 20% and, it's possible future feed with that 20% to secure some of that feed.
They have done a lot of ore treating agreements at that mill.
Yeah. So look, they might give it away cheap now, but they can make it back in toll treating in future. However that'll go, because you got like you got the Maggie Hayes processing plant to the east. That's the nickel one, but you've also got Cosmic Boy to the south, which was that's the one. Hopefully, Medallion will be finalising on for the old and converting into a gold, but that's a 600
hands.
Yeah, that's a 600,000 ton plant, so you wouldn't be able to. It's not big enough to get an oxide thing through it. So I think the Marvel Lock one's a million ton. So
tell me a bit about Van Uden, mate.
Oh, well, you bring it up here. It has had an absolute shitload of drilling. So historic gold production, 2.5 grams back in late 90s. So as I said, 4 million, 2.5 million cash, 1 million of shares at 17.5 cents. And considering it's only trading at 14.5 today, so they've put them at a premium, and then deferred payment of $500,000. So yeah, you look at the 163-page document. There is a shitload of drilling that has been done around here, and it looks like they've got a pit, an old pit with that could be cut back, taken deeper, but then there looks like there's a pretty bit of a system to the east. I think that's east of it. So, mate, who bloody knows? Bit happening in the Forestania district. So once, obviously, if Medallion get their Ravensthorpe dirt and whatever else they can possibly find with the gold, once they get the gold rights, hopefully, of those, like the flying fox, spotted quail, bloody tenements, they'll have their bit going on. There's potentially this coming up. So it looks like they're pretty much, they'll have a couple of mil left over for drilling, but I'd say they'll have to raise a bit soon. But, mate, it's a rebirth. But in terms of the price, for that many ounces in resource, I couldn't believe it. In this market, because everyone thinks gold's at 4,600, we'll take 20 million for that.
What are the ounces categorised as? Are we talking
most inferred?
Inferred, yep.
So it's like, they're sort of there.
The caterer to poke a few more holes in and just notch that up.
Mate, just smash them out. But MMS are going to rip the arse out of this joint, I reckon. Get them down to Forestania.
In that same sort of part of the world, Matty, there's there was a Golden Horse Minerals IPO'd recently, which was used to be called Alton Rio, renamed, and they did an IPO on the ASX, but simultaneously wiped their TSXV listing too. So I mean, that makes sense for an Australian project. But I
think there was one down at Ravensthorpe that was
Cat Gap.
That's
actually a pretty good project. However, the company that was stewards of that project probably broke the Guinness World Record for the most dilution kind of ever. It was Classic Minerals. First and only time I'll ever say that company.
So that was the repeated share consolidation.
Oh man, that was put 1 for 1,000 a few times.
But that one went for 7 million. So
yeah,
there were
probably a few. I mean, you had to check the debt in that company as well and all that sort of stuff. There are probably some gnarly terms in amongst everything.
Yeah. So anyway, we will see what happens. I thought this was rather interesting. Oh,
sign of the times.
Another. Where am I? I found there was from the Metis Nation on the back of what we briefly spoke about the other day. The Metis Nation put an announcement out about concerning their relationship with Next Gen Energy for the Rook 1 project. I'll read a bit out. I'll bring it up on the screen. The Metis Nation of Saskatchewan are affirming their stronger relationship with Next Gen Energy, including their support for advancing the Rook 1 project. On June 2023, NextGen concluded an industry-leading impact benefit agreement in respect to the project. And so the previous court decision between the Metis Nation and the Saskatchewan government that said that decision indirectly relates to certain now expired exploration permits issued by the province of Saskatchewan. So it's, again, I guess that is bullish for NextGen that whole thing won't really have any effect on advancing the project. I think it just seemed like a lot of it was inferred by people before, and this was, I guess, confirmation from the nation, Metis Nation, you'd say. So,
good for NextGen to see that.
I suppose so. It's bloody, yeah. And I can't wait till 2030 comes. So we can stop talking about whether next gen's producing by 2030. They either will be or they won't be. Everyone, there'll be a new date to talk about.
5 long years, mate.
Oh, anyway, rightio. Thank you very much. Get ya bloody 100. There's been some smart people that have used this $100 offer for the Underground Operators Conference. Make yourself smart and use it as well. Link in the show notes if you're an underground bloody lover.
And a massive thank you to MMS Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, WA Waterbores, Swick, Quattro Project Engineering, and Cross Boundary Energy.
Go Tim Taylor.
Boodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.